Welcome to the first edition of our ETF Insight series, where we chat with innovative leaders from the ETF ecosystem. Today, I am delighted to be joined by Terry Norman, who is founder of Blue Tractor Group. Welcome, Terry, and thank you for being here. I thought a great way to kick this off is if you could tell us about Blue Tractor Group, what you do, and then I can follow up with some questions.
Thank you, Andrew. Thank you for having me this morning, and good morning, everybody. Blue Tractor Group is a US domiciled company who filed for exemptive relief with the SEC back in 2015 and was granted exemptive relief in 2019 for what we term as Shielded Alpha ETF. And we were granted that exemptive relief with a number of other companies, Presidian, New York Stock Exchange, for what's being termed a semi-transparent ETF, an ETF that doesn't disclose all the underlying holdings or the weights. But at Blue Tractor, we try to find innovative solutions to problems. And obviously, our Shielded Alpha was an innovative solution to the problem that active managers had with putting their active strategies into a fully transparent ETF wrapper. So that was our first innovative solution. We've since moved on from that. We've applied for exemptive relief for custom baskets, which is really important if you're going to optimize the tax efficiency within the ETF structure. And we're looking to expand the investable universe that the SEC currently really has all these wrappers handcuffed. And the investable universe currently comprises of basically US domestic equities and contemporaneous exchanges, Canada, Brazil, and Mexico. And finally, we're the only wrapper, the only company who's filed with the SEC to expand the exemptive relief that we've been granted into long-short active strategies. So we're pretty optimistic that we're making good progress on all these fronts. And that's what Blue Tractor is all about, bringing innovative solutions to the ETF space and investors.
Can you tell us how you differentiate yourself from any competitors that you might have in the market?
Before I differentiate, I would say what we all have in common. What we all have in common, all these structures, are two things. One, the protection of the intellectual property of the manager, and two, protecting the manager's trading strategy. So all the wrappers have that in common, but they do it in different ways. Now, the Blue Tractor structure is a pure turnkey solution. There's no new layers of administration like some of these other wrappers have. The creation unit is clean. Managers not receiving securities that are not in his portfolio during a creation. So there are two key things. The transparency that we offer is balanced by the opacity the manager requires. So we believe we've come up with this optimal balance of opacity and transparency. The opacity the fund manager wants for protecting his IP and trading strategy, that's one side of the equation. But on the other side of the equation is the transparency that the market makers need for orderly, efficient markets, and the transparency numerous investors want, particularly discerning investors like high net worth individuals, ESG type investors, who want to see that on a contemporaneous basis, their investments are matching their morals and what they want to do with their money in terms of, climate change, governance, and social awareness. So that's where we differ, because we offer this optimal balance between the two. But what Blue Tractor also has done, and this was, we are the only wrapper that has actually achieved this. And this is quite important for new managers looking to enter the market. And that's a 351 rollover. We're the only wrapper that's achieved this. And this was achieved through a combination of work from Redgate, US Bank, and Vidant. And what a 351 rollover achieved was getting money from existing vehicles like SMA accounts into the ETF without triggering a capital gain. And we were the first, and I believe the only wrapper that has actually achieved that. Once again, showing innovation. One other feature that we offer that no one really else offers is our cloud-based technology. our cloud-based technology gives great power to the manager in terms of tailoring the creation unit every day to mimic or match their short, medium, and long-term goals in terms of their objectives. It also gives them the power at their fingertips with just a couple of clicks of the mouse to obfuscate their trading positions, i.e. when they enter new positions and build those up, or when they exit a position. And that's key because obviously they don't want to suffer front running from predatory traders. So they're the sort of things that differentiate the Blue Tractor structure from everybody else. And it really is that fine balance between opacity and transparency.
No, that's great. Thanks, Terry. That's very interesting. And I know you mentioned at the beginning, Terry, that Blue Tractor Group is domiciled based in the US. Do you have, since we're over here in England, do you have any plans to jump across the pond and expand over here?
Absolutely, we do. And we've had great dialogue with representatives from the Central Bank of Ireland who are looking to move away from fully transparent ETFs into what I'll term less than fully transparent ETF. But obviously they're aware that if they do that, they lose some information, both the markets and investors. So they're looking for an incremental step to move away from fully transparent ETFs as they are in Europe at the moment. And we believe we are that incremental step because use of the shielded alpha ETF, you still have all the names within the portfolio, so you know what you're exposed to, but the weighting schemes is slightly different. So what you're saying is, you want to know you own Apple. Yes, you will know that. But do you really care whether you own $85,000 of Apple or $90,000 of Apple? Not really. As long as you've got the ballpark, you're happy. And that's key for, again, someone like ESG investors, because it stops greenwashing. They can see the investments every day. No greenwashing will come on. If managers have to report, with a 3-month flag, they can greenwash their portfolios. When they can see the securities every day, there's no opportunity to do that. So we're optimistic that our dialogue with the Central Bank of Ireland is going well. And we're aware that there's a number of smaller managers in the US who'd like to move into Europe with their active strategies. They all need an equivalent white label over in Europe. There are 1 or 2 that exist, and we're in dialogue with those as well. So hopefully we can actually push the boundary of ETFs forward in Europe and bring less than fully transparent ETFs to Europe as well. And the great thing with Europe is, where I mentioned these wrappers are somewhat handcuffed at the moment in the US, restricted to just US domestic equities and contemporaneous exchanges. In Europe, they will allow non-contemporaneous equities, they will allow fixed income, they will allow derivatives. So it really will open up the space to numerous active strategies in Europe. And that will be good for the US as well, because they can see how well these wrappers work when it's not US domestic, when it's not just contemporaneous exchanges.
We're looking forward to seeing how you're expanding, and thank you again for joining us for our first edition of ETF Insights. And if anyone has any questions on Blue Tractor Group, you can reach out to Terry directly at terry@bluetractorgroup.com. And thank you for watching.
Thank you, everybody. Thank you, Andrew.